All right, what's going on, Ben? Okay. Welcome in, everybody. Let's get to it. We're going to be talking about small caps, which have been on a very interesting trajectory over the past couple of weeks or so. For those that have been watching small caps, let's talk IWM here, which is obviously not a perfect representation of small caps because it includes a lot of the crap that's not near the top. But for all intents and purposes, it is up 3.68% in the past week. It did have a down day today, down about 1.14%. Past month, it is still down 1.47% after spiking back in late July. So right now, if you pull out to the full year, small caps are green about 6.69%. They've been as high as green up 12.5%. Just again, using IWM here as a metric. But there's a lot of these names that have just been absolutely huge movers. RKLB, I feel like, is it still a small cap at this point? 3.3 billion now, but went up 25% in the past week and 55% in the past few months. That's where people have their eyes on it. We've talked about HE a lot on these spaces. Hawaiian Electric has been one that people have been paying attention to. That one had a big spike in the past, I guess, 3 months at this point. It's come down from that a little bit. Seems like maybe the momentum's slowing, but for some of them, they are still rocketing pretty hard. Ben, do you got me now?
Yeah, hold on. Okay. I'm trying to accept the co-host invite. It was doing funny things earlier. Okay, I think it's working now.
Okay,
Yeah,
good.
yeah, I'm
Glad you
good.
got it. Yeah, how was your day in the market?
It was today I could have done better. We had my pre-market picks. Most of them didn't work out, but we had like killer calls in our community, and I should have adjusted a little bit quicker. But yeah, my trade account was down a modest 2%, up 28% for the last 5 days still. So doing okay. Little tiny setback today, but things are still looking good.
Got it. Got it. Sniper, how about you?
I haven't listed as a listener here. Is he shown as a speaker for you?
Yeah, he shows a speaker for me.
Hmm. Okay.
All right. Well, I'm waiting on him, but Ben, you want to start running through some of your watch list here, things you've been looking at?
I could do that. It's just get those other panelists on. Do you know who we're expecting on the panel?
Yeah, all the normal guys confirmed. I see Mantle with Godfather in the audience now.
Oh, here he is.
Um,
Okay.
see
Cool.
Snipe up here. So yeah, all the normal guys confirmed.
Yeah, yeah.
See
Awesome.
Shy just popped in.
Okay. Great. No, it's been a crazy week. Is Logical showing up today?
You should.
Yeah, man, his ASPN just freaking exploded. That was incredible move Friday and today. But yeah, look, the huge win for us was TSSI. As we won that competition last week with TSSI up 50% in 1 week, and I think Money Mark is coming today. Um, did he confirm with you? Do you know if it's coming? He's gonna have his if he's here, he's gonna have an update on TSSI, which should be very very interesting. That's right now my number one largest position. Um, we'll talk about that more. I think I said last week in one of your shows, like this is the strongest, highest conviction I've had on any stock since I rode Air EHR from 250 to 25 a couple years ago. So this has achieved that status. I think there's, once every 2 or 3 years, you find a stock at an inflection point and all the stars aligned, and I think this is one of them. So I'll let Money Mark give the details when he shows up. Um, but yeah, other than that, I mean, it's just been a great market for small caps. So looking forward to seeing what the whole panel does.
Yeah, so unfortunately, Logical messaged me. He had work come up and he can't get on. The others, I didn't message individually, by the way. I know that we just had that chat and we were letting people know when things were happening. So hopefully they are able to show up for this one. But I think we messaged in the chat. Actually, I did on Thursday. And it looks like the Godfather and Logical and Maj all said that they can make it. So we'll see who ends up actually getting on stage. We could go over to The Godfather first. Now, if you want to run through some analysis, what you've been looking at in this small caps area.
Yeah, hi guys. Thanks for the floor. So, like everybody else, waiting on what Powell will have to say at the end of the week. I think it's fair to say that rates are going lower, and lower rates are supportive, generally speaking, for small caps. I don't think there's much disagreement on that. I will say though that there are a few caution signs. Obviously, we've had quite the bounce back. We saw a peak in July that coincided with the expiration of the VIX, and that happens tomorrow. So that's something I'm watching. I think the bar is a little bit high here. Fed funds are pricing in 3 rate cuts this year. I don't think we get that personally, but at the end of the day, I'm not sure it matters a great deal if you can continue to pick solid companies that deliver exceptional alpha. I am a bit cautious that this U.S. dollar weakening against the Japanese yen continues here, and some will say that the carry trade is all but unwound. I'm not so sure about that either, but suffice to say that to the extent that the U.S. dollar continues to weaken against the yen, it will impede liquidity flows into equity markets in general. So those are things that I'm watching from a macro standpoint. In terms of individual small cap names, I imagine a lot of the listeners here are back from previous sessions, so I'll just recap a couple of names. Previously, I mentioned Sensus Health. They hit actually a 52-week high today. I'm happy to say, finally breaching the $7 mark. This stock was up in the $14, $15 range, and I maintain my view that this thing should be valued in the double digits. This is again, a medical device company that is delivering software type metrics. Still barely a smidge over 10 times on a PE basis, 5 times on an EV/EBITDA basis, and for that you're getting recurring revenues with the top line growing over 25% and 30% EBITDA margins. It's just staggering to me that this isn't already back through $10. So that one I continue to like. The other one that I think is worth mentioning again is Applied Optoelectronics, AAOI. And I mentioned it in the context of several more of their peers having very good quarterly reports. The most recent one being Fabrinet FN, which reported yesterday after close, and combined with the after hours yesterday and today's activity, it's up a total of some 16%. The other peer that reported on Thursday of last week was Coherent, COHR. That's Stanley Druckenmiller's largest position currently. Look, all 3 of these companies, well, there's more, including LITE, which is also performing really well, but they're in this optical transceiver space. Again, this is simply converting electrical signals into light for transmission over fiber optics at up to 160 times the speed of copper, which eliminates a big bottleneck for AI data center transmission speeds. If you want a little more sizzle on your steak, it's worth taking a look at AAOI. They are the Crapco, if you will, of the group. They have had some hiccups in terms of execution, but for that, you get a valuation that's a half to a third, depending on which metric you look at, to its peers. And you get a company that's got 26% short interest. So any hint of execution there. And look, the tide is lifting the boats. They indicated it on their quarter as well, that they're starting to see some real demand specifically for their 800 gig product. So just waiting for the match of execution to light that gas plume. And this thing has a big gap to fill on the chart between 16 and 19. It could easily skate to over $15 in a single trading session. So those are names that I've talked about in the past. A couple of names that I'm looking at right now that I'd like to chat about. One is Fubo. I think everybody knows FUBO, Fubo TV. And of course, newsworthy recently is the preliminary injunction that they received against Warner Brothers, Disney, and Fox, who have gotten together to pitch a sports streaming joint venture called Venu. And And what's important here is that they got a preliminary injunction. It's a high bar to get a preliminary injunction. Essentially, what these guys have done is forced the likes of Dish and the likes of Fubo to bundle, to pay for big bundles. So, Fubo's in the sports business. They want to provide ESPN, TNT, other specific MLS, you name it, offerings to their clients, but they're being forced to buy CNN and Disney Plus and all these other things. So essentially, the judge has said, look, this is potentially in contravention of the Sherman Antitrust Act. And I've done some back of the envelope math here. And look, half of their content they buy from these guys at a 30 to 50% markup. So if you do the back of the envelope math on this thing, it comes out to about every 10% cost savings is around $70 million directly to the bottom line by my math. So if at the end of the day, they get a price concession of just 10%, this thing immediately goes free cash flow positive. In the most recent quarter, they were down to an EBITDA loss of 11 million. They've got no debt payable for the next 2 years. Revenues grew at 26%. Subscribers grew at 24% year over year. They paid down 20% of their debt in the last 2 quarters. The other thing that's interesting that's happening right now is their executive chairman, Edgar Bronfman, is also pitched to buy Paramount. So there's some talk about, well, does he put the two of them together? Who knows if that's going to happen, but that's out there. Look, there's 50 million shares short on this thing. It's around 16% short interest. The stock's right at its 200-day moving average at $1.94. There's huge option open interest at $2. This thing could squeeze through. I think it's an interesting situation. Look, it's a crappy business. They have 13% gross margins because of their content costs. So, structurally, any discounting there can have a major impact on their financials. Have we got time for one more?
Yeah, one more quick one. Well, what do you think, Ben?
Yeah, no, I just wanna chime in a second. Also, give you you're talking all fundamentals here, but you have been absolutely incredible, on fire in our community the last couple of days, especially today. I just wanted to give you a big kudos on buying the dip in Fubo. You haven't mentioned ASTS. You've been all over ASTS leading up into the earnings report, predicting a short squeeze right after the earnings report. Buying the dip in BKTX today as well. So in addition to this wealth of information, I just don't want people to get the wrong idea. Is like, this guy's like an encyclopedia, but he is an amazing tactical trader as well. So just wanted to let people know, give Godfather a follow here.
Thanks, Ben. I appreciate that. Another little interesting situation that's come on my radar is a company with the ticker symbol GTEC. And this is it's headquartered in New Jersey. They've got a 54,000 square foot EV assembly plant in Baltimore. It's for EV forklifts. But essentially, this is a Chinese microcap company. All the management are Chinese. The bulk of their business is selling drivetrains and transmissions to 100 different Chinese forklift manufacturers. That's not just EV transmissions, but regular transmissions as well. Look, what's interesting about this thing, if you dig into the financials, it's trading at just over $2. They've got $1.40 in net cash. They've got 20% EBITDA margins. The thing is trading at less than 7.5 times on a PE basis, less than 0.1 times on an EV to sales, and less than 1 times on EV EBITDA. Now, that's ignoring this note receivable on their balance sheet of around 30 million. And, they said on their conference call that they expect to collect on this in the next 12 months. And I don't know if there's concerns about their ability to collect on that or not, but this effectively represents receivables from clients and customers. And, if this is real, then this thing is trading at a negative enterprise value. So you're effectively getting, look, it doesn't grow. It hasn't been growing, at least on the top line. But you're effectively getting a $100 million a year run rate revenue business at a negative enterprise value. And not just 100 million revenue run rate business, but something that kicked out, $4.5 million in adjusted EBITDA in the most recent quarter. So this is really piqued my interest. They are talking about expanding their partner ecosystem and returning to growth as well. So you'll see if you look at the chart, GTEC, that the bottom is really in here at $1.50. It traded up to $2.50. I think this thing could have legs. The float is just 7.2 million shares.
Wolf, I can step in here. I just want to take a step back and actually go around the panel and get everyone's thoughts on macro. Yeah, Godfather just gave us lots of good picks, but if you can just give a quick, because I want to move on to the rest of the panelists, a quick 1 to 2 minute max on rates, where we are with the market and small caps, just a macro sentiment overview, and then we'll go around the panel with that, and we'll save the stock picks for a second round. Godfather, you want to go with some macro overview first?
Well, I kind of did before I got into the picks, so I'll concede the floor to those that have more macro comments.
All right, Money Mark, your hands up. Go.
Yeah, I mean, valuations are a little bit stretched, and we see some deterioration in the economic picture going on, but we're not going off a cliff, and that's what we said a few weeks ago when everybody thought we were going off a cliff. The data was skewed. People weren't really looking under the covers, and here we are, roaring back towards all-time highs. So that's worked out. And where do we go from here? There's still room for upside in the market. There is still deterioration in the economic picture, but it's not anything that the Fed can't handle as long as they take action. And they've got 300 basis points of firepower before they even start to really get, accommodative, right? Like we're still in a tightening position with interest rates. So interest rates can come down quite a bit, which is bullish for stocks in terms of valuation calculation. And at the same time, that decrease in interest rates can stave off recession. Goldman Sachs just lowered their projections of a recession from 25% odds to 20% odds. I think there's a reason for that. So I think we're good. Just keep picking good stocks, period.
Yeah, Ben? Oh, I was just going to pop it over to Shai, see if you had some thoughts here on everything that you've been trading in the small cap world.
Yeah, so I put it up there on the spaces. Tom Lee just did an interview today. Not just I think it was a couple weeks ago. He mentioned that he thinks IWM will hit $300 by end of August. He pushed out that timeline to the end of this year. So he's maintained his bullish stance. I am a little caught off guard that small cap isn't really catching as much of a bid as the indices in the past week or so. Maybe it's because of that huge rug pull we experienced 2 weeks ago during the market tantrum that Monday morning. A lot of the money just went towards I don't know, safer, high quality names, and I probably would have been part of that camp if I was heavily invested in small caps. It's still only maybe a third of my whole portfolio, but I have a feeling a lot of people sold out their small cap high beta trades to buy these high quality names like the Nvidia at 92, Amazon on 150, Palantir at 21. I think all the funds went towards those kind of high quality names that was benefiting from the AI thematic and took away from the small cap repositioning that occurred a couple weeks before. I don't know if the repositioning is going to occur again in small caps. It might. And all those, if you went hard during that Monday morning, you're up probably 25 to 30% in a matter of weeks, and that might be good enough for you. You might want to reposition towards those lagging small cap names that haven't really caught as much of a bid as I anticipated during the end of the summer. So that's one part. Part two is we're about to enter some real seasonality weakness in September and October. I don't really know how the small caps really will play into that, but I know the indices will be highly volatile probably feel some pullbacks. I anticipate like small caps won't be able to catch a bid because of that. Maybe the will won't go down as much, the Qs and SPY, but there's still, it's going to be prevent them from maybe hitting that leg up that they absolutely need to. So I think I was disappointed that small caps didn't really catch the bid in August. I really have a hard time believing in September and October they're going to as well because of seasonality weakness before the election, especially. However, things are improving in the small cap world. Things will not be as bad as it's been past 2 years. Rate cut is coming narrative is still there. It's still going to maintain momentum. Once we get past the seasonality weakness, I really do think small caps are going to absolutely rage in November, December. Similar fashion as last November, December, if you guys remember, small caps just went bonkers. I know right now, the past week, it feels like SPAC season all over again with a lot of these former SPACs just going crazy. Rocket Lab, including one of my highest convictions, is participating in it from Simply Play to ASTS. But still, it's really a handful of names are really catching that massive run up where the majority of small caps really isn't participating as much. That might occur in November, December. We'll see. But I'll pass back to you. But that's kind of my 2 cents on the macro.
Sweet. Really good thoughts on the macro. Hey, if everybody could take a second to share out the space, would
Hey,
be
and that
much appreciated. Yeah, I'll go to you one sec, Mark. Yeah, if everybody's able to just take a second, share out the space. If you're in the audience and you are a small cap investor, comment some tickers for us that you are watching into the spaces chat below. You can just click that purple 3 comment button near the bottom of the space and get that there. And for everyone else, it's real easy just to go ahead and throw this space a retweet, or you can also tweet it out onto your own timeline quite easily as well, just by hitting the share button in the top of the space. Much appreciated. Okay, let's go on over to Money Mark.
I don't hear Mark. Do you guys hear him?
Yeah, no, I heard him for a second beforehand. You there, Mark?
Yeah, you may have to drop off and come back.
Oh
Yeah, you
man.
dropped. So let me jump in while we wait for him to come back with some macro thoughts of my own. So IWM exploded a couple weeks ago on light CPI, broke a critical level. I think at the time was 216, and then we got into this kind of scare of, hey, is that light CPI too light because we're heading into a recession? And that's one of the factors that resulted in that. Besides the yen carryover trade unwinding into that little Black Monday scare. So all of a sudden, we had this paradigm shift during that time where bad news used to always be good news in terms of inflation, and then we switched to bad. Bad news is bad news, and good news is good news. So we've had a string of strong economic data here in the last week or so, and I think that's what's put a cap on the IWM a little bit. Because with stronger economic data right now, you start thinking about rates again. Can they cut or not? I talked about this last couple of days. I don't know, with the last bunch of economic data. I think we'll be I put it this way. There was something going around since yesterday that Jackson Hole. So we had jobs data Thursday going to be important. Jackson Hole maybe even more important Friday. That some analyst out there saying at Jackson Hole, Powell is going to say 50 basis points is on the table. I don't know if that's just a bullshit rumor or what, but I don't see that. So I think there's been a string of good economic data. If the economic data continues to be good, like Thursday, that's the key. The key to, you have to draw this fine line. It's got to be like a perfect scenario for IWM where the economy is just a little bit weak, so that we can have low inflation, so we can lower rates, but not too weak that it's going to bring on recession. And I think that's what caused the IWM to pull back a little bit further, and the money flowing to the stronger stocks and the QQQs and the SOXLs and all of that is this good economic data that's been coming out. So yeah, I think Thursday and Friday could be very important. I think Shai made a very good point about the seasonality. I do remember not only last November, December, it seems like it happens very often into a January effect, which I love for small caps, because of tax loss selling in end of November through the end of December, and then you get this big snapback in January. So I would say November through January potential for big seasonality move in small caps. And Money Mark, you back?
Hope so. You hear me?
Yep, go ahead.
Yep.
Yeah, I'm on the other side of the world. It's over in near Romania, 2 a.m. over here. So no, I was just gonna say it just to dovetail off of what was said regarding seasonality. If and this is not a political statement, but obviously we've got some pressure on the stock market. Due to concerns with Kamala Harris getting into office and what that would mean for stocks, taxation, and things like that. So, with a certain amount of that priced in, we're looking at a coin flip right now. If you do get a Trump win, or it starts the momentum starts to slide significantly back in his favor, then really watch out on that seasonality.
Another good point there by Mark. Uh, Ben, I know that you went over a few items towards the beginning of this. Did you have some thoughts on some of those stocks that were shared there by Shy or by The Godfather, and ways that people in the audience who are kind of hearing us talk through certain tickers can go about approaching their research here? Because I know that you really like to build out that story.
Yeah, well, look, we've also been playing Rocket Labs on the sentiment sympathy play with ASTS. But yeah, how we do it at Story Trading, we start with the catalyst. We don't start with the chart, which I would say like probably 95% of FinTwit, they're starting with the chart. So we start with the catalyst. We interpret the impact of the catalyst on sentiment and fundamentals, and then if it's a positive impact on the sentiment, positive impact on the fundamentals, then we'll look at the technicals and come up with a trade idea, whether that's a day trade, a swing trade, or a long-term investment. And the other side of this, we're going to talk. We got a CEO interview just coming up in 2 minutes with the CEO of GameSquare. He's on. We'll bring him up in just a couple minutes. But after that, we'll talk about TSSI, which Money Mark brought to the attention of your community and our community. And that's an example of, okay, he had a fundamental thing going on, and that's great. But first of all, I'm interested because the catalyst was proximal, right? The catalyst either just happened or is just about to happen. And that's the situation I'm interested in because I believe markets are efficient. We believe that markets are efficient at story trading. So if you have a delta of information, you have a delta in price. And this lends itself to getting into stocks right before rapid re-ratings. That's like the number one thing we look for is rapid re-ratings and inflection point catalysts. So, that was a situation where there was a catalyst there. Money Mark will tell us about the fundamentals in a few minutes. And then, we also liked it from a sentiment perspective and a technical perspective. So it was like balls to the wall long on that stock last week, and it ended up being amazing, up 50% in a few days. But yeah, that's our process over at Story Trading.
Beautiful. And yeah, whenever they're here, go ahead and feel free to pull them back up. Mark, we were talking a little bit earlier today, and one of the comments that was made in the space was someone felt like there was a lot of momentum, and then that momentum kind of, pulled back hard over the past week. What do you think the small cap market needs to regain that momentum?
Yeah, I mean, it really does come back to the Trump trades returning to the marketplace. I think there are some animal spirits out there. So as long as the markets, stay up, speculative um, juices really kind of flow towards the top end of the market, and that's kind of where we are right now. I think a lot of people would think that we're in a topping process or near, historic levels where the market would tend to top out. So, that's the last bastion of movement is, can you trust the large caps, or do you want to move down to the small? And we have so many winners amongst the small caps now. You're seeing them flow in, and I'm starting to see the volume come into my videos, and the number of people coming through it's really picked up. So all it takes is interest and good stories, and that's what we're coming out with. This whole group is coming out with great story after story, and when it makes sense and the earnings or whatever the catalyst is comes through, and people get that win, they get hooked. So we started that process. We got a little bump in the road. I don't think we're going to see another one because the picture in Asia is weak. So, there's two things that go along with that. One is inflation should be a little bit under control in Japan, and they're going to be hesitant to raise rates any further, given what happened the last time they tried it. And China has to come through with liquidity soon. So that's going to be a catalyst for small caps as well, given the weakness in their market. So, the economic background around the world is conducive to inflation not coming back. That's conducive to Japan not raising rates further. And China is in such a bad condition with their real estate market that they have to inject liquidity, which is positive for everything downstream, which includes crypto and small caps.
Well put. All right. I see we got Justin up here. Ben, we ready to roll here?
Yeah, let's do it. I'll let you start. I don't know if you have any boilerplate stuff you got to get across first, and we'll get
Hey,
started.
hey, hey, Ben, did you want to go over TSSI before that, or do we want to do that in a little while?
Let's do
If
it.
you can
Let's do it
hang
afterwards.
on the other side of this interview, do you mind?
Yeah.
Yeah. What time? It's
In
2
like
a.m. here.
20 minutes or so.
That's fine.
All right.
That's cool.
Awesome.
Gotcha.
Yep.
Thank you.
Okay, cool. So, and yeah, we're gonna take like the stock picks and some of that other stuff afterwards. So everybody do stay on, of course. Super excited though that we're able to get to do this. We've obviously been talking small caps for a while here. One of the small caps that I know came across Ben's radar, and I think all of us have seen before, is Game, GAME. I put that ticker up in the top of the space, and we were able to get Justin Kenna coming on here to talk with us directly, the CEO of Game. Now, this is full disclosure sponsor segment, but I don't intend for us to just be easy, light softball questions. I really want us to dig in here and have someone that can kind of take the hits. So that is the goal for this as we go about it. I'm going to turn it over to Ben if you have anything first to say, and then we can get an intro by Justin and get rolling.
Yeah, absolutely. And yeah, it's uncanny. Like we started the small cap space just in time. Like 2 months ago, I'm like, well, if I think small caps are going to be hot, let's get this small cap space going. So this is just the environment where you want to get educated, you want to learn about what small caps are out there and what they're doing. Because when the tide turns and as interest rates go lower, it's going to be a lot easier to make money in small caps. You're going to see stocks with good stories that are turning around. They're going to do much, much, much better. So yeah, we have the CEO of Game here. One of the things that made me interested in connecting him with you, Wolf, here is because they were the acquirer of FaZe Group, FAZE. So FAZE, that's like an esports team, and I knew about it from before because my nephew was like into esports, and he was like telling me about FaZe. It was like this whole big thing. So yeah, when I found out the Game was the acquirer of FaZe, I said, all right, let's do this. Let's bring them on and hear more about them. So Justin, I think you can unmute yourself here.
Hey guys, how we doing? You can hear me okay?
Yep, we hear you. So awesome. Thanks for joining us. And as we said, it's going to be no softball questions here. We got a stock panel of like heavy hitting fundamental investors. So get ready for it. But if you can first just tell us a little bit about the esports total addressable market and a little bit about the FaZe acquisition and where you fit in to that market in terms of your position in the market.
Yeah, no worries. I'll give you a little bit of intro and backstory because I think it's relevant here. I was actually the
And
CFO.
sorry, Justin. One last thing before you get started. Any panelists are up here. We want to make this open, like a conversation. So you can raise your hand at any time if you want to chime in. You can do that anytime. Go ahead, Justin.
Thanks, guys. So, I was the chief financial officer and chief investment officer at FaZe Clan. For those who don't know, FaZe Clan is one of the largest esports organizations in the world, but also one of the largest gaming lifestyle brands. So, if you have a look at their following across any of the major platforms, you'll see how large their audience and following is. I actually met the guys at FaZe around 7 or so years ago. Helped them raise 60 million in debt and equity, and was CFO and chief investment officer there for around 3 years. I actually left to really start and grow GameSquare, so bit of a full circle moment for me in actually acquiring FaZe Clan. For those who don't know, FaZe went public through a SPAC. And we're actually trading at one point north of $1 billion sort of less than 18 months ago. Now, certainly not here suggesting that their fundamentals ever justified that, but the brand is really powerful and really strong. So, Yeah, very excited by the acquisition. We're able to acquire FaZe earlier this year in an all-stock deal for around $14 million. It's been a lot of cleanup, and we've really, done a lot of work reinvigorating the brand, re-engaging audience, which we've really done. We've tripled audience engagement, in the last 3 months. So really excited there. We've pulled out a lot of cost and feel really bullish, about where this is headed. So just to kind of give you guys a quick, sort of elevator pitch on GameSquare. The focus of GameSquare really is around building this next generation media company, and that is focusing on connecting brand publishers, game publishers, and tier one brands with the ever growing gaming and esports communities. And I think for those that are listening that know much about the gaming space, or if you've seen any investor decks on the space, you'll see and understand how big the audience size is, and it's growing. But one of the challenges has been that, really, unless you've been a publisher or a platform, they've really been the only ones, monetizing that audience at any real scale. So that was really the purpose of GameSquare. And today, we have three main segments. Our first segment being technology and SaaS. We actually have a data analytics company who has 9 of the top 10 game publishers globally as clients. We have an influencer end-to-end platform. Segment 2, we have a full-service creative agency with a media network that guarantees brands eyeballs and really helps reach this, large audience but very fragmented audience. And then thirdly is our owned and operated IP, which is we have a live experience and events business, as well as obviously FaZe Clan, which we touched on. So it's sort of just a quick kind of brief intro overview of GameSquare today and obviously the recent acquisition of FaZe Clan.
Awesome. Sounds good. I want to dive right into the main concern and slash opportunity when it comes to small cap investing is the ability to get to profitability, especially in an environment of higher interest rates. Now, that'll hopefully be alleviated a little bit in the coming quarters. If you're a small cap company and you're able to flip to profitability, even in a bad macro environment, your stock will react, will perform. So I was pretty impressed. You just reported earnings last week, and the amount of costs you guys have been slashing and approaching profitability was really impressive for me for a company that's like, let's see, it's a 33 million market cap, 100 million revenue. Tell us a little bit about your drive to profitability and your thoughts on if you can do that with the cash you have on hand.
Yeah, absolutely. Look, the key for us is certainly one, getting to scale, and I think that we've shown an ability to do that. We've given sort of high level guidance of 100 million in revenue for this year. Our pro forma revenue through the first 6 months is 52 million, and if you look historically at seasonality within the brand and ad spend, certainly in the gaming space, with a number of large events and catalysts in the back half of the year, and obviously holiday season and bigger spending on merch and other opportunities. It's generally around a 60-40 split back half of the year to front half of the year. So, we're obviously tracking really well and feel really comfortable about, getting to that 100 million and really surpassing that in terms of 2024 revenue. So starting to get to scale, number one tick. But to your point, Ben, I think getting to profitability here is absolutely key. And we make, no qualms of that. We're very clear on having an absolute ruthless pursuit of getting to profitability. I think if you look at what we've been able to do with FaZe Clan, FaZe was burning at one point last year around $5 million a month. They had around 100 staff when we started talking to them, and today that's around 30. We understand that asset intimately. We've been able to pull out around 18 million of annualized costs. And to your point, Ben, in Q2, our adjusted EBITDA loss improved by 2.5 million to 5.4 million. We expect that sequential improvement into Q3 again, if not greater, certainly through continued cost improvement, but also through expanded margins. So we're growing revenue, but we're growing that mix of margin revenue through our owned and operated IP and our agency businesses. So, we believe that we'll, cut that. If you look at the math there, right, 5.4 million, 2.5 million improvement in Q2. You get that again plus a little, and you see a really clear path to getting to break even / profitability, within sort of Q4, and that really is our goal, our target. It is very achievable. Cash obviously important. Ben, you mentioned that we had around 14 million on balance sheet 30 June. We had through a recent divestment, we had $4.75 million come in last week. So we have a strong balance sheet. We've recently paid off our senior secured notes, so gotten rid of our major debtor there, and we feel like we're in really, really good shape. We've got cash, we've got runway to get to profitability, and for us now, it's getting to scale, and it's really being an outlier in this space.
Yeah, that's really great. And if and when that happens, or if the market sees that's imminent, I'm sure your stock is going to be rewarded. That's the number one key inflection point to small caps really turning around their trajectory of their stock price. So really pleased to see you were able to forecast or at least target Q4 profitability. I mean, that's only a few months away. So that's awesome. Turning a little bit, when we talk about story trading, we talk about catalyst fundamentals, also sentiment. So sentiment, when I see relationships with NFL, Dallas Cowboys, this is stuff that garners a lot of attention and can help, increase the value of your company. If you can speak a little bit to those relationships, and also I just forgot, going back to what is your, in terms of competition, are you the number one, number two? Like where do you stand in terms of esports?
Yeah, great questions, Ben. So I'll hit the last one first. We certainly do have competition. I mean, the space is growing enormously. But really, if you think about those three main segments, we have competitors within each three. But from an end-to-end standpoint and really building this, one-stop shop platform, we don't. And I think that's really resonating with big brands. And obviously, you mentioned the NFL there. We were recently able to win, a very exciting creator roadshow that we're rolling out this year with the NFL season actually starting in Dallas. Funnily enough, Jerry Jones, owner of the Dallas Cowboys, being our biggest investor, and I'll touch on that in a moment. And then at the Pro Bowl and the Super Bowl, and if all things go well, we'll be looking to take that to every city, in every week of the NFL season next year. Think of that really as, kind of a college game day, Pat McAfee style cross into the gamer creator world with, some of the biggest personalities. Obviously, you can think of Tim the Tatman, Ninja, who are two massive creators who currently live within our ecosystem, with a clear crossover, into the traditional sport and media landscape. So really excited about that one. We're continuing to grow our partnership with the NFL. To kind of just to also, touch quickly, Ben, on the comps. It's been an interesting one. We have acquired two of our comps, being Engine Gaming and FaZe Clan. We've cleaned both of them up. We've pulled out a lot of cost, and we're starting to get to scale. Enthusiast Gaming, EGLX, was a similar comp, which is kind of funny. They are probably more of a programmatic, a lower margin media business than we are. I'm not sure it's a fair comp, but they touch on the gaming industry, so people like to look at that one. But we really are the industry leader. We are looking to get to scale, and one thing I'd touch on from an M&A standpoint is we've got the right pieces. We've done the cleanup job. I think we've got a good track record there. But anything we look at on that front moving forward is going to be cash flow positive. Again, I'll go back to the point that we have a ruthless pursuit on profitability. We understand where the market is. We have a sexy story. We have the right pieces, but that's not going to resonate unless we can really generate cash flow. So that's the key there. In terms of catalysts, you touched on a couple. I think a few more to sort of add to that, and really thinking about, okay, cool, well, they're improving on cost, but there's still a delta there. How do you go from, burning $5 million to getting to profitability? And that's not just on cost, that is on these catalysts. It is really on, you know, scaling IP. It is on growing out really segment 2 and segment 3 of our businesses. So touched on our full service agency. We had some news out to market recently where we sort of announced around $3 million of recent client wins with 5 Hour Energy, Top Golf, Dairy Max, to name a few. This is high margin revenue. We have a number of other really large deals in the pipeline that we're really confident on getting papered and announced and out to market soon. These are higher margin areas of our business, so really will start to catapult that margin mix and get us closer to profitability quicker. But also, these are big 7-figure multi-year deals, so really nice capital markets deals. And then thirdly, the owned and operated IP business. This is where the NFL event exists. We recently did a really successful creator roadshow with Epic Games, which we're really proud of. There's another number of other opportunities within here on the FaZe Clan front. I know I kind of gave a bit of an intro into FaZe at the start, but FaZe from a brand perspective, extremely strong. We've been able to bring the founders back to the fore. FaZe Banks has really been leading the way with his vision around talent and content. And I kind of touched on it before, but we've tripled viewership in 3 months. We're really proud of that. And that's how we're going to start to generate real dollars on that side of things. So we're in the process of launching a new shop around merch and consumer products, which we think will be a big catalyst and driver into Q4. But we also have a number of large deals in the pipe there based off the momentum, the eyeballs in market. So there's some of the catalysts, Ben, to look for, not only in sort of driving that top line revenue, getting to and surpassing the 100 million, but importantly, as you mentioned, getting to profitability, really raising the margin mix and getting us to profitability here by end of year.
Awesome. Sounds like you got your focus in the right place. Stock Sniper, you got a question?
Yeah, I have a question. So I'm gonna start off with a comment. I want to say first thing, Justin, I see an 85% increase in revenue. Just want to say congratulations on that. That is an amazing thing to see. Um, I have one question about one of your acquisitions, and it is Engine Gaming. And my question about Engine Gaming is, again, I understand that the esports space is huge, and especially with all the content, I know that there's a lot of ad spend on the esports space as well. But my question about this is Engine Gaming's objective to help individual creators program their concept of a game, or is the objective to program different concepts and sell these to larger game creators like Riot Games, like Epic Games, etc.?
Yeah, it's a great question. So certainly the latter, right? So we have 9 of the top 10 game publishers as clients. What we've found with the growth of this space, and to your point around continued ad and brand spend, is that brands are wanting up to date data and analytics on who are the biggest creators, what games are relevant, how do I reach this specific niche target demographic, and that's what Engine Gaming helps do through Stream Hatchet, which really is the de facto market leader when it comes to data and analytics in the space. Your first part of the question is an interesting one, less on game development, but really around sort of influencer management and sort of mass deployment of influencers and creators. That's really more on the Sidekick front. So Sidekick is an end-to-end influencer platform, and it really helps there in terms of attribution, distribution, management of mass deployment of influencers, affiliate marketing, performance marketing campaigns, and so forth. So hopefully that answers your question. But again, it really does feed into that ethos of the Game Square model, right? Which is, how do we connect game publishers and tier one brands with these huge and enormous growing gaming and esports communities?
That's a great answer. Thank you very much, Justin.
Awesome. Wolf, you're next. Go ahead.
I had a question. I obviously think that people look towards the phase stuff. I'm assuming that there's, of course, that's maybe, let's say, 5, 10% of the business, and there's so much more below it. But of course, that's probably what people really see publicly. I personally am in that Gen Z generation. I have followed Face for a while. A lot of, controversy, drama, that type of stuff comes along with it. I think like a week ago, like FaZe Banks, or whoever is a leader, like kicked out one of the other guys from the group chats, and then there's back and forth. Does that drama ever like impact the business as a whole, as a larger? Is it good for business? I'm trying to like fully understand.
Yeah, another good question, and certainly something that we need to manage, right? I think is probably the best way to answer that. It's a really interesting one, right? When I was looking at acquiring FaZe Clan, there's certainly a level of risk, not on the esports side. I think the esports business is extremely buttoned up. It's more of the competitive side, and really, it's funny with Jerry being our biggest investor, but really think about the esports side as being FaZe really are the Dallas Cowboys of the esports world. But on the FaZe media front, the lifestyle side, I mean, you're spot on, right? It's been there's been sort of controversy and things that have sort of followed it around for some time. I think we're doing a really good job of towing that line, right? And that is understanding the content that is being created that resonates with the audience and who the brand is, and allowing it to be the brand. And I think that's really important, right? My job isn't to sit here and put a muzzle on Banks or any of the big creators. It is to try and help put parameters around them. So, to your point, to capture the audience, to engage the audience, and then to be able to partner with the right brands that maybe are a little bit more risk averse, that are more interested. That these are your challenger type brands that are willing to take a few more risks to really convert and reach mass eyeballs. I mean, if you look online now at all the biggest streamers, there is a little bit of controversy attached, right? And it's something that I certainly have to manage and certainly talk to investors about and the market about and take accountability and responsibility for. There's certainly a line, but we are in the gaming business, we're in the entertainment business, we're in the content business, and look, I do think that allows you to be maybe on the riskier side a little bit, and just making sure that you are partnering with the right brands that allows you to own the creative process and to be organic in what you're creating so that you can convert for the brands. Um, that piece that you mentioned with Banks kicking out, one of the guys, that was a prank. It's not actually real. A lot of what's going on with the guys, they are different memes or things that are trending online. Banks is, and I don't say this lightly, a genius when it comes to the internet, to engaging audience and fan bases. So, a lot of it is tongue in cheek. Don't get me wrong. There is a line that we need to toe. GameSquare is a public company, and that's on me, and is my responsibility. I don't take that lightly. So yeah, I think it's certainly a fine line, but to this point, I think we're doing a good job, right? Which is we've tripled audience, we're finding the right brands, we're really monetizing, we're cleaning up the business, and we're bridging the gap between sort of corporate and creative. And I think that's really important to be able to do that in an authentic way.
Great questions, man. We got two more here, Maj and then Shai. Go ahead, Maj.
Hey man, thank you. Hey man, thanks for doing this. I have a couple quick questions for you, maybe here are a few actually. I'm looking at your goal to become profitable here, I guess, in Q4, maybe break even. And I guess the question, I see some potential seasonality in your business. I'm looking at the analyst estimates, and they don't necessarily jive with you staying profitable until maybe on a full year basis until 2026. They have you breaking even in the fourth quarter this year and making money in the fourth quarter next year, but then overall losing money. So when you say you're planning on getting the profitability in Q4 this year, first of all, are you saying that's like net income, or are you talking about cash flow? And can that be maintained, you think, moving forward, or is it too early for you to say that right now in terms of what you know and what's going on with your business?
Great question. No, talking adjusted EBITDA, we've obviously done a number of M&A transactions, which make it a little harder from a complete profit loss standpoint. But, we believe by year end that a lot of those pieces will have normalized and we can get to a normalized-ish burn, right? Like, I'm sure you can imagine that acquiring a company that was trading for $1 billion for $14 million, while that sounds great, there's a real cleanup that has to be done. And there's no doubt, that's taken a lot of time and effort and stress, and it takes time to get to that normalized burn. But yeah, so talking about adjusted EBITDA, I do very much believe that that's scalable from Q4. This isn't a one-time thing. We've reached it, and then seasonality so dramatically affects our business that we fall off a cliff. I don't think that at all. I think that if you look at the fact that again, pro forma first half of the year, we've been able to do 50 million revenue. I think getting to that normalized cost burn is really important, and we will do so over sort of Q4, Q1. So I believe very much so that we can get to profitability and to scale from there. But look, this is a newer industry. We're proud of the growth, we're proud of the progress, but I'm not going to sit here and say that this is just pure, easy, linear growth, right? But what I do take comfort from, and I heard you guys talking about sort of the macro effects before. I mean, I've been in a knife fight for 3.5 years, right, in micro cap land, and certainly from an ad and brand standpoint. So we've navigated some really, really tricky markets, and I think we've done it really well in terms of, our 2023 revenue didn't quite hit where we thought it would because of some of those effects with, budgets either going away or minimizing or a bit more hand holding and getting to yes a little slower than we would have liked. But we're actually starting to see that translate into real dollars. And what I would say is from an agency standpoint, being bucket 2 of our business, which
Do you guys hear
area of it
Justin?
Yeah, I think we lost him.
Lose
is
them.
Oh,
really,
here it is.
No, he's back. Probably just got a call. Go for it, Justin.
sorry, yeah, that is an area of our business that it really is only, year 4 of the business. So what we're seeing there is agency of record opportunities, multi-year deals, multi-year 7-figure plus deals that are starting to mature. So, our 2025 view, our base of revenue that we're starting with is so much higher than it was in 2024. This is early days. We believe adjusted EBITDA, we can get to break-even profitability in Q4, but I very much believe that is a 2025 hitting, scaling, getting to net income profitability within 2025 and for a full year. So, I don't have the analyst numbers in front of me. Look, I'm not surprised by that.
Right.
There's certainly some risk in that, but we feel really bullish that we can get there.
Okay, so with your cash position right now, so I think I'm looking at is it 12 or 13 million dollars? Is that right?
Yeah. So
Yeah.
cash at 30 June was around 14 million. As I mentioned before, we had a divestment that produced another 4.75 million that came in on August 15.
Okay.
So we have ample runway
So
to get this.
you think that cash is enough to get you to where you got to get to without having to tap capital markets, or you have that visibility? I guess I'm trying to figure out, like, you have a nice pile of cash, you're cutting expenses, but at the same time you got to obviously acquire brands or acquire make acquisitions to grow too. And you think with the cash you got, you can do all that without risking a deep capital raise?
Yeah, we absolutely do. So, we feel that if anything, there's more cuts to be done and to get a little more efficient, rather than the opposite, right? We don't have major needs right now to be spending capital. If we were to look at doing any acquisitions, like I mentioned before, we'd be looking at doing stock deals with profitable businesses that are generating cash flow. Otherwise, we wouldn't be doing it. Our CAC is really low, right? Because we have all of these pieces in house, right? We have talent in house, we have data in house, we have media in house, we have content in house. And so for us, the ability to scale from where we are is real. And it's more about pulling more cost out rather than a need to spend additional dollars to grow.
Okay, great. And one last question in terms of your model. I think you say here your website, your growth is based on acquisition of esports influencer networks, professional esports teams, adjacent assets, and entities that serve in esports, gaming sports. So I'm curious on the assets that you have relationships, either your own or have relationships with. Are there contracts that kind of end with any of these, entities that you have to renew every so often?
Sorry, could you just repeat the last part? I heard the first and the middle part broke up for me.
Yeah, as any of the revenue that you generate here, of the assets that are generating the revenue for you, um, are there any of them based on contracts that you don't own? Relationships that could end, for example, that and what that looks like. I don't understand the business totally, so I just know from when I interviewed ETLX years ago, that concerned me a little bit. And I don't know, you're a little different than that.
Yeah, no, we definitely are. I think what would help is so our sort of technology SaaS managed services business. If you think about, let's just call it 100 mil high level, right? That bucket number one, segment number one, is around sort of 10 to 15 million, being technology and managed services. That's really high retention, high recurring, high margin revenue. The challenge there is obviously getting to real scale, but that's nice public market revenue, revenue while you sleep, etc. Bucket number two is really our agency and media business. Um, I think that this is probably more where you're talking, right, which is how much of this is recurring versus RFP land and needing to win to be able to grow. Pretty pleased that a large part of this is now recurring, right, which is we are, again, in year four of the agency business. We certainly are absolutely in the RFP process, and that's how you get wins and then scale clients. But on our programmatic side, Newsweek is our major client. They've been with us for a number of years, and it's pretty low risk in terms of moving away. It's a contract that we have, and our agency business. Our aim is to convert every client that we work with into multi-year, longer-term deals and agency of record opportunities. That's starting to resonate more and more. I think of that segment two as being around 40 to 45 million of revenue. And then bucket three is our owned and operated IP, which is around sort of 35-ish million of revenue, which is really FaZe Clan on the FaZe Media side and our owned and operated IP business. That is, look, on the esports side, certainly there's some variability in terms of performance, right? Because esports, the easiest way to think of that financial model is akin to traditional sports. And prize money will be contingent on winning and so forth. I think one of the big positives there is we are FaZe Clan. We have a brand, so we aren't as reliant on having to win to generate revenue because we're able to do so through content, through our distribution channels, through merchandise, and through other verticals. So we're less reliant there. But I'd be lying if I had an exact percentage for you on recurring revenue, but can certainly get you that. It's a percentage that is increasing. We feel very good again about what our base is to start 2025.
Sure. Well, thank you.
Awesome, and we can connect you guys later if you're interested. Let's just take one more question from Shai. Got to get to Money Mark after that. It's 2:30 in the morning where he is. We want to get an update on TSSI. So Shai, go ahead.
Yeah, appreciate it. Hey, Justin. So I come from the entertainment world, and I also know a couple folks from FaZe as well. But I used to be a director of corporate strategy for Lionsgate, so I absolutely know the business of eyeballs and how tough the economics is of that business. Curious though, for you, in the post AI world, are you guys leveraging AI to kind of use as a lever to improve the business economics of your business model, or is that kind of not? Like, I'm curious on how you use AI right now in the business of eyeballs. Like since I was in that world pre AI, and so I'm just curious if that's helped you guys pull to that profitability in a couple months, or that's something you guys are using that for something else in the influencer world.
Yeah, it certainly has, and mainly in bucket number one at this point. We do think there's opportunities on the agency side, absolutely. But on our technology side, yes, we actually have something exciting in the works there that we're building out, and certainly something I'd say watch this space on. I can't give too many details there, but we certainly are using AI in terms of mass influencer deployment, in terms of brand logo recognition, certainly on the technology side of the business. AI is definitely certainly a buzzword in capital markets, but has certainly helped us in terms of different features we've been able to build into our technology platforms, and something that we'll continue to monitor. We are also looking at really building out our performance marketing, affiliate marketing part of our business, and in terms of being able to really convert at mass for brands. And there's a number of AI solutions that can help us do that by obviously reducing manual work and overall headcount cost there as well. So a little bit of a watch this space, but yeah, certainly in segment one of our business, AI has been critical and really helped us.
Awesome. Another quick question before I pass it to Money Marks. It's late for him. Obviously, Netflix, Amazon, Apple, they're getting into live sports. I think that's going to be a precursor potentially to esports. Do you see any of their presence right now in your realm of the esports industry? If not, do you anticipate them participating more because they're investing so much? So they're in the business of eyeballs, but specifically now they're getting into sports. So I think that's going to be them doubling down as well on the esports front.
Yeah, it's a great question. We haven't in terms of pure endemic esports to this point, but I think that it's certainly a natural evolution, and you're absolutely spot on, right? Like you can see the trend that's happening with everything that is live, and that obviously feeds into our world with these kids that are streaming nonstop to these huge audiences, right? Like the reality is that we are bullish about esports, and there is a lot of upside there, but certainly on the live streaming side of the world, like some of these kids are, streaming to 50, 100,000 people, from their bedroom on a Tuesday night, and it's crazy and it's staggering. So yes, I think that we will see traditional media converge on this space more so, especially as it pertains to esports tournaments that are starting to generate more mainstream buzz. And I think that what's going on, I'm not sure if the listeners are aware or not, but what's going on over in the Middle East right now with the Esports World Cup is a really good example, right? It's really high production quality. It's been 8 weeks of competitive tournaments. There's a club championship between all the global esports teams. FaZe Clan's currently sixth on that. We've got our PUBG team competing tomorrow. Hopefully we get a win and we'll probably get a podium finish there. This is for $60 million of prize money. 60 million, 60. The club champion gets $7 million straight to the entity. If we would have finished third, that's $2 million straight to the top line. That's not prize money for the competitive game that you're playing in that you share with the players. That is, to the overall entity. So with these increased prize pots, with the move, from these big giants into live streaming and their move into live TV, traditional sports, I think that evolution is natural, and I think there's a huge opportunity for us to be at the forefront of that, not only from an esports perspective, but also helping navigate really the intersection of pop culture, right? Which is, I think, part of really what we're doing with this NFL program, in bringing some of the biggest creators to NFL games, having them stream live to their channels and reach a new demographic for what is obviously already a giant in the sports world, being the NFL. So uh, Right now, not a huge amount in terms of endemic esports. Certainly a lot more on the creative front for sure. But I think absolutely that's a natural evolution. I think we'll be really well positioned to take advantage of that.
All right, great, Justin. That was awesome. Packed in a lot of information in just 35 minutes. We'd love to see you back here with an update after next earnings release in 3 months from now. I just posted a little summary of your earnings report up top from last week. Wolf, got any closing comments before we hand it over to Mark?
Yeah, I really enjoyed this conversation here with Justin. I want to commend the speakers up here, Maj, Shai, Snipa, everybody that's on stage, really for great questions as well. Just digging into those financials, understanding runway background with the company. I really appreciate it because that's how investors actually learn. Would love to do more of these together with you guys in the future as well. Before I turn it over to Mark, Justin, did you have any final comments on the conversation there?
No, this was awesome. Thank you so much for having me, and honestly, really great questions. So, yeah, hopefully for the listeners, it was beneficial, and keep an eye on what we're up to because I think it's the start of really exciting things, and would love to come back and join you guys at some other point.
Perfect. Justin, have a great
Awesome.
rest of your day or evening.
Thank you.
Thank you, guys.
Awesome.
Appreciate it.
Thank
Perfect.
you.
All right, Money Mark, we're excited to hear from you.
Let's hit it. Sorry to keep you up late, man. Money Mark TSSI, my largest position. Thanks to you, up 50% in 1 week. Tell us more.
Hey, no problem at all. So, just to give you the quick update on the picks that I've given you, some of the picks I've given you guys before, just a quick 30-second. EVLV came out with great earnings. That stock has hit a 3-month high. It's now 85% off of their lows. I think the stock now at 333, it's filled the gap, now has to break through that gap. Once it does, I think it's clear sailing to $6. They got in with Disney, the New York City, the Olympics, and they're expanding into X-ray machines as well. That's EVLV. They're doing great. Kraken, KRKNF, one of the hottest companies, and maybe the hottest defense company on the planet, called Anduril, Anduril, just got $1.5 billion in funding. I've spoken about them before and how they're pulling Kraken along for the ride. Well, they just delivered their first Ghost Shark XL autonomous underwater vehicle. This is basically the next generation of submarines. This is basically Tesla for defense. If you look up Anduril, and they put $3 million of Kraken material in each of their normal Ghost Sharks and $8 million into these XLs. They've already said they're opening a facility where they're going to build 200 of the smaller machines per year, and that's over $600 million in revenue for Kraken, who only has 70 million now. So this is a company that once these facilities are fully up and running, Kraken can go from 70 million to 700 million in revenue. The market is starting to pick up on that. The stock's up 33% since I started talking about them with you guys. And then last but not least, before we get to the best, Geodrill, they came out with great earnings as well. The stock is now 92% off of their lows. Stock, the CEO owns 40% of the company and acquired $80,000 more with his own pocket money. Has told me in no uncertain terms that the company is going to continue getting stronger because of the deals that they have signed, multi-year deals with large tier 1 gold miners. They provide the drills, and he will sell the company once they get to once he can't grow the company at a fast pace any further. So this stock now at $2.64, up 92% off of their lows. I see this one going to $4. So last but not least, let's bury the lead. You can look at the Jumbotron up ahead for more. Shout out to Maj at Geo Investing as well. Working with him on this. I've put out a lot of tweets this week, so you can check those out. They came out with earnings just this past week, and since the time where we started talking about this company with you guys, I had modeled them out and told you that they were going to come out with. I saw them doing 2x quarter over quarter on the integration revenue and over 5x on the bottom line. And they beat that. They came out with 5 million of integration revenue, up from 2 the quarter before, and that was with just 1 month of revenue from the big win that I was talking to you guys about. I've told you that it's XAI. I believe that they are working with Elon Musk at XAI, at Twitter, and at Tesla. If you read through their transcript, they do talk about autonomous vehicles. So, boom, there you go with Tesla. And the company did. Now, of course, they're not saying that they're working with Dell. They're not saying that they're working with Elon Musk, XAI, because they can't. But when you look at the clues, you see exactly what's going on. They admitted that it's a high profile AI data center project. This is the only high profile AI data center project out there. It's XAI. It's clearly the one when it comes to that. When you map what they did this quarter, what they said in the conference call to what Elon has been saying in the marketplace, it's no doubt what's going on there. I also said that they had added 200 employees during the quarter. The company hadn't told us that, but they did admit on the call now that they have over 200 employees. They only had 80 before. So 200 to 280, that's 200 employees. They're somewhere in that ballpark now. So enough, patting myself on the back for calling it. What does this mean going forward? Well, if you were on the call, and only if you were on the call, you heard the guidance that they gave. They delivered this quarter just $12 million in revenue, which is great for a company their size, right? 6 cents per share, which is a 24-cent run rate, which is great for a company trading at $4. But they said that $12, their guidance implied that $12 million in Q2 is going to 50 or 60. That's 50 or 60. Yes, revenue to quadruple or quintuple this quarter, Q3 versus Q2. The market doesn't know this. This is not a company that's covered by Wall Street analysts. And this is how we make the big bucks, is being there when companies like this announce these sort of things. I confirmed this with the CEO. That's the first question I asked him because nobody asked him on the call. Did you say 15 or 50? He said 50, 50. And that's just getting started because our facility can handle more business than that. And we're looking for another facility. Okay. So why is this happening? Right. First of all, just know that when I run the numbers on what they're looking to do in Q3 based on their guidance, that's going to get them pretty close to the 20-cent run rate. The 20 cents of EPS that I told you that they might be able to do next year in a quarter. They might do that this quarter. That would put them on an 80-cent run rate. Now, I'll let Maj tell you later, but he did a great piece on the earnings call, and he thinks that they're going to hit $1 EPS run rate pretty soon. Now, you could put whatever PE you want on that dollar, but this stock is trading at $4 right now. The market just doesn't know what's going on. Now, of course, the stock has run great since the earnings call came out because the people who were listening are buying the stock. It's Ben's largest position. It's my largest position. I don't know what it is for Maj. He could tell you himself. But the bottom line is they're going to continue to grow into this quarter. They're still not at full capacity that they told us 2 quarters ago that they were going to be able to 10x their integration revenue in the current facility. They haven't 10x'd it yet. And the CEO told me that they're already looking for a whole new facility on top of it. This company's growing so much that here's the punchline. So why is this happening? And it comes back to the number one short that I've been giving people over the last few months, which is Supermicro, SMCI. Dell is eating their lunch. I've been telling you that. My contacts in the field from 30 years of being a technology analyst for Wall Street told me that SMCI is not being able to scale up with the customer support that's needed. Dell is a long-time veteran of this industry. They just didn't have the product and the integration capability to do it. Well, now they do. And TSSI is proven to be the linchpin. They're delivering product on time. They said this on the conference call. SMCI is not. There's a chance that SMCI gets kicked out of XAI and they give that to Dell, and it's because of TSSI. And as a result, Dell gave them free money, free capital this quarter to expand what they're doing so Dell can eat more of SMCI's lunch. Okay. So bottom line here, you've got Google, Meta, Microsoft, Amazon, and Elon all racing to achieve AGI. Elon thinks they're going to find it within 2 years. The rest can't afford to let him go after it. So they're all pressing the gas pedal on AI data centers. You heard it in every single one of their transcripts. Okay. So who's going to deliver all of these solutions? Well, you see it right here. It's TSSI. They've got the full facility right now that they're ramping up. And Dell's giving them money, and they're looking for a whole new facility to go from 10xing that they haven't even reached yet to 20x that they could achieve in 2025. So they could get to that dollar run rate that Maj is talking about real soon and just keep going, because the CEO said that 2025 is going to be even better.
That's crazy, man.
Yeah, Ben,
I
I'll give you a little PS, by the way. I've gathered some more information since my last analysis,
yeah.
and I'm not going to reveal yet, but there are more wins that are going to be coming down the pipe. I will be revealing that maybe later this week on my show, and if I do, then I'll come back and let you guys know about it. But Elon's not the only one looking to do business with TSSI.
So that was crazy because I chose TSSI as my pick of the week for one of Wolf's stock picking shows, and we won, obviously. That was great. But I had predicted 3 open green. I predicted, you won't believe this. I'm like, we're going to have 3 open green candles, and the target is $4.50 to $5 within 3 days. But I went on my show this morning, and I'm like, all right, we reached the target. We're going to consolidate for a while. Maybe we'll work our way up towards $7 before the next earnings report. After hearing what you just said, I'm like, I don't know about consolidation, man. I might have to buy more
Yeah,
tomorrow.
yeah. I
Masha,
mean,
yeah, go ahead.
yeah, I mean that's every dip's being bought right now, and it makes sense. I mean, at the end of the day, right? I can't tell you what their 2026 is going to look like, but I can tell you that while these companies are all racing to AGI, they can't get enough integration capability. They can't get enough power for the testing. They can't get enough of the liquid cooling capabilities, and TSSI has it. TSSI's biggest problem right now is finding a facility that can give them as much power as they need to handle all the business that wants to do business with them. They'll solve that problem. If they have to put a nuclear plant, under the facility, they'll do it. But that's the way it's going for them right now. So, if you're looking at a buck run rate of EPS coming soon, and 2025 being stronger than 2024, I mean, you tell me what happens when people start to realize who they're working with and what
Yeah, I
they're
mean,
doing
look,
for
if
them.
it works out the way you're talking about, we're talking about a $15 to $20 stock before the end of the year. Maj, put a bow on it.
Hey man, thanks. Yeah, and thanks Mark, man, for that's a great summary. I just like anybody, yeah, this is probably my largest position now. Hey, everyone out there, terms and conditions, GeoInvesting apply for this conversation here for me. So you agree to that? But yeah, I think one of the most important things I want to even point out here is what Mark just said about Dell kind of committing to TSS. So anyone out there who's thinking like, okay, because 80% of the revenue or even more sometimes is coming from the Dell relationship. It's not just Dell. It's all these customers that Dell brings to TSI to do the integration. But obviously now Dell is showing they're committed, and it's pretty funny because we were at I was at a conference in Chicago last week, and TSI was one of the companies there. And I kind of did a fireside chat with him. He's one of 6 companies, and I brought that up, and he was like, "Yeah, that's in there," and he's you really don't want to talk about it too much, but yeah, and but that's really really cool. And I get the good sense too here. I think there's some worry about how they're going to pay for this, facility expansion, whether it's the current facility as well as maybe going into a new facility. And I get the sense that it's not going to be equity, or if it is, it wouldn't be a lot at all. But I got the sense most of it's going to be kind of dead at some point. And also, I would expect them to get support from their OEMs to help them also. But one thing I want to talk about too, really, on why I think that this 20-25 cent run rate and EPS per quarter is going to be more than achievable here coming soon, is because everyone's really talking about their main rack integration business, which is building the racks, in-house and sending them to, a data center. That's like basically called enterprise level data center integration. They're not really talking about the growth really no one's really talking about the growth in the modular side of the business. And that's basically a plug and play type of data centers. You build a data center in-house and you start dropping it into like a outside, fence, outside, it's all enclosed. There's no building on the building. And with that type of deployment, there's maintenance revenue with that. And maintenance revenue comes, at least as they disclosed last quarter, like 70% gross margins, compared to your maybe 40% in your, the regular gross margins for the actual integration work. So I think that that's more, what I like about the story is like 24 and 25 is the regular integration work probably. Then at some point, probably a tail end of 25, because it's a longer sales cycle to do the modular, you'll have this another growth element come in with higher margins with modular, with the maintenance revenue attached to it. So I'm really excited about that. That's why I really think they can start even exceeding these kind of EPS targets that Mark and I are kind of talking about here. So I'm really excited about where these guys are going. I think this is a unique case here where you have, I hate to say it and jinx it, but so many great things going on at the same time. I think it's unique to have this kind of like perfect storm going on. And, and people are starting to realize that who TSI is, even though no one's mentioning Dell, or Twitter, everyone's starting to put it together. And if we start having other news come out with other companies kind of building out data centers, everyone's probably gonna start knowing this is TSI doing that work. And I don't know, Mark, if you want to talk about, was there any relevance in the AMD acquisition, of ZTech? If it matters at all, talking about that at all at this point?
Yeah. I mean, no, that was, a multi-billion-dollar acquisition. It's strategic, it's defensive. On AMD's part, they need to do something to match what NVIDIA did on the ecosystem side of things. I've been saying for well over a year, people, were negative on NVIDIA last year. Not everybody, of course, but the bears had come out and said, well, AMD has a chip that's better than NVIDIA's. So what? It's just a chip. Those chips don't integrate better into servers. Those servers don't integrate better to the networking equipment. They don't have InfiniBand. They don't have the software. They don't have anything else that NVIDIA has. Well, they're trying, right? Obviously, they're not going to give up on all that. So that's what this acquisition is. ZT's they have a lot of server talent, but they also have a lot of engineering talent. That's what AMD is going to keep. Okay, so AMD wants to take that engineering talent and use it to develop better chips that will integrate into servers better, so that they can challenge NVIDIA better. And they're going to spin off the hardware part of the business. Somebody's going to buy that, right? Because right now, obviously, selling AI servers is a hot business. SMCI took the lead. Now Dell is starting to crush them. You can expect HP, Lenovo, etc. Every data center server vendor needs to be in the AI data center space. So that's the machinations that are going on right now. And basically, you've got the hyperscalers or Batman, and they're willing to give the best equipment to anybody that can play Robin to them. And right now, you look at TSSI, and they kind of fit the bill for what they do. Interestingly enough, their guidance for this quarter, if they do over 50 million in revenue like they're talking about, that's a $200 million run rate. The stock has to double just to get them to 1x revenue.
Right. And I think Mark too is like it's a situation where you're starting to see that when you see when you see that procurement revenue go up like that, because a lot of that's going to be procurement revenue. That's showing you Dell is even more committed to TSSI as they level that up. These are all signs that Dell is here to stay.
Hey,
and
right.
Do either of you know, has management said anything about uplisting to a better exchange? Because, man, I know a lot of people who want to get into the stock, but they can't. Not all brokers allow over-the-counter trading, and also there's no after hours, which if there was after hours, I'd be buying right now, Mark.
Yeah, I think that probably is going to come. I don't think it's going to come to tomorrow or next week. Maybe Maj has some comments on that, but I'll tell you this: they're definitely going to be incentivized to do so, because once the stock hits $7, that puts them right in the ballpark to make it into the Russell 2000 next year. And this is something that I do. I was a long time Russell ARB. And once it looks like they're going to be getting in, you're going to have ARBs start to buy the stock just because they know the institutions are going to be putting them into the Russell 2000 next June. That buying starts in as early as December or January. So, once that happens, now they have an incentive to uplist because they won't get into the only thing that'll keep them out of the Russell is the uplisting. And which, by the way, Maj, I think they now qualify to uplist.
They definitely qualify on the net equity side of things, which is great. There was an interview that Daryl did with, I think it was called Merger Markets. It's behind a paywall, and they interviewed me for the thing. And that was when the stock was at 90 cents. We hadn't cracked one yet. And they asked him that very question about uplisting, and he said it wasn't like in his vision at that point. But that stock was under $1 then. But when I do bring that up to him, he kind of like, hey, if it happens, it happens. It's not, I don't think it's on his like my first 3-4 things to do here. What I like about Daryl, man, he's just like, when we talk about IR or whatever, he's like, I just want to run the company. This guy is like all about business. Even when I met him, like in Texas when I did the site visit, and I think Mark brought this up too, was you have a unique situation where this guy is a sales guy, which guys need it. But he's also turning into a great operator too, and he knows exactly how to delegate. And that's like he traded with great CEOs. He knows exactly who the right people are, where to put them, how to deal with them. He's really improved the culture of the company too, which I think is which is really nice.
Well, Maj, it's actually what's funny is that he's proven the opposite first, right? You had this guy brought in, and he's a multi-decade, high-level VP of sales for companies like IBM, i2, if anybody remembers what that was from the internet bubble, and now Dell. Coincidence. And instead of selling first, he fixed the company first. He fixed the operations first. He made it efficient first. And only now is he getting all of his old sales buddies who know how to sell deals into the company now that he feels confident that he can scale up and handle deals. So it could get crazy. And I think what's going to happen now is the new CFO is going to be the one that drives the uplisting process, because like I said, once they get up to above $7, the prospect of them getting into the Russell 2000 is going to make their cost of capital, which is something that Daryl might not quite understand, as the first time public company CEO. To get your cost of capital down is critical, and getting onto the Russell is like a rite of passage that says you're a real company.
Right.
For sure. So once the stock gets to 7, the only thing that stops them from getting in is an uplisting, which is.
And they're going if they want to do an acquisition strategy at some point, they're going to need to use equity down the line. So they have to be listed at some point, I'm sure, for that too.
Bingo.
Yeah.
All right, that was a lot of fun. Wolf, you still there? Wolf,
I'm here, but I think I need to wrap soon.
Okay. All right. I don't know if Stock Sniper had a chance to say anything. I know he had that question for Justin, but was there something you wanted to mention on small caps or stock for the week or something?
Well, to be honest, I'm not the biggest small cap trader. By definition of small caps, we're talking about companies that are between 250 million to 2 billion. None of the stocks that I own meet that criteria, but if I had to bring it to the closest one, I'm going to have to say I like HIMSS, and HIMSS is sitting at 3.5 billion. If you want to still consider that a small cap, that is my favorite small cap stock. I really do like HIMSS, and I like how they're creating a recurring revenue based on subscriptions, and it seems like they're really taking over the male enhancement space, and also really tackling a lot of things with the hair loss space as well. But
yeah, I love that pick. I doubled my position yesterday. It's my pick of the week for Wolf's show last night. So good pick there. Maj, last comment, and then we'll have to wrap it up.
Yeah, I mean, it's really, really quick. I wanted to end it with another data center, kind of really, really quick. I don't know if I want to call it pitch yet, because I just came across, our table last week, but I'm going to start taking a real close look at PSIX. Before I even say what they do here, we reported numbers last week, 72 versus 28 EPS, and sales are actually down a little bit.
the stock got dinged, and we put it on our buy and pullback portfolio because we noticed a few things. Either they paid down like a lot of debt, like 70 million debt over the last year or so. They got maybe 150 million left, but really more importantly, these guys, they make like different type of power solutions, and one of the things what they do is they make these encasements, I guess, for generators. And I noticed in a press release here that they're talking about now that sales are down the first half of the year, increase now moving forward, and it seems like they found this is one of those like cool kind of things where you have an old company learning new tricks, and they're starting to aggressively target these encasements, I guess. And I need to find out more about it for data centers. I'm assuming generators and data centers, and that's what's going to fuel some of the growth I think moving forward for these guys. And these guys are looking for higher margin revenue moving forward. They have 20 million in cash, 150 million in revenue probably, paying down debt aggressively, and it's selling as a value trap. It's selling basically at a PE of 9 trailing, a PE of 6 on that forward number. So if they keep paying down that debt, and I get a better line of sight on where they are in this data center kind of move here, it's going to get really interesting because that data center information was buried in the press release. It was also buried in the press release because they said they're working on some really large projects in the data center world here. So I'm really excited to continue this one over here, and we are strategically prioritizing the rapidly expanding data center sector. They say this in the press release. They say a couple of new strategic partnerships poised for drive future growth in the data center market. Working on closing some major contracts. I don't think anyone knows what these guys do. You're seeing the volume kind of pick up. It spikes up, it goes up, comes back down a little bit, as I think discovery of that information is kind of starting to play through. So it's going to be really interesting to see how that plays out. And I'm ready to have an interview out to the company to interview them if I can soon. So that's PSIX is the symbol. Actually, in the OTC.
Okay, PSIX, great. Wolf, final comments?
It's always a pleasure to do these with this crew. Thank you so much, Maj and Ben, Snipa. We had Money Mark, Shy, and others that came on here as well this evening. Great interview, great chat. Still over 110 people in here all the way at the end. We've been running for a while here, so nothing else for me, Ben, but looking forward to some more great conversations next week. Let's take a look. I think that we could do one probably Tuesday evening. It's just going to have to be slightly later. My space is going to finish I have a space that's going to run from 6:15 to 7:15. I could do it at 7:30 if you think that would work Tuesday evening.
Okay, we'll circle around.
Yeah, Wednesday's going to be Nvidia earnings, so that one would be tough.
Yeah.
And Thursday I do have some stuff, but I could do Tuesday, so we can put in the chat and just see if the rest of the small cap crew can do it. Then I could do it Tuesday at 7:30 p.m. Eastern.
Sounds great.
Okay.
Thanks for
All
doing
right.
this.
Thank you, everybody. Have a great
Take
evening.
care. Yep. Bye-bye.
All right. Take care. Bye.